Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And your wrap-up is for Wednesday evening, September 17th, 2025. And the time right now, well, we're sitting here right at 7 p.m. Central Time. So the stock market back up a little bit. The reactions were all over the board today as the Federal Reserve cut interest rates by a quarter point. They made it clear that they think tariffs are the cause of the inflation that they're seeing right now. They believe that U.S. importers are eating a big chunk of the margins that they're doing. And the question is, how long can they do that before they pass it on? So they're looking for it to accumulate over a certain period of time. Could be well into 2026. They talked about rate cuts now being needed because the labor market is soft. They realize inflation's up, and the Fed chair said, our two mandates are fighting each other right now. We've got inflation climbing, labor's weakening. Which one do you choose? Because you can't do the right thing together to solve both the issues. So they're electing to loosen the strings. They didn't go 50 points. They're going to be moderate. They're going to look it all the way through, which I have to sound like a broken record because that's what I've been telling you all the way through on this. So it's data, it's inflation, it's weakening, it's lack of immigrants getting jobs. But even if they were coming in, who's going to hire them when companies can't make the decision because of the tariffs? The impact of it that they're finally starting to see. If it's a finished product, that's one thing. If it's a part of a product that they finish in the United States, well, that's a lot less impact of the inflation. So it's not an easy choice, and you're seeing that. But as I view that, how could you not be long-term friendly to gold? That's what I'm thinking to myself. I can make arguments why the metals could have problem in production in terms of silver, not producing the metal, but manufacturing in silver and copper right now. The dollar, while it's nice that it's rallying, I think it'll be short-lived. I think the market will want to pull back as it realizes the Fed's going to keep cutting rates, probably twice more this year and sometime into 2026 if things stay just as they are. Talking about that as we get on here, you're going to get the jobless claims report in the morning, and I, along with many, will be looking at it. Is it going to not be as high? It went to 263 last week. We weren't looking for that. They're now looking for a reduction on that back to by 23,000 to 240. We'll see the Philly Fed regional business activity. We just saw the New York Empire State Manufacturing in the toilet. Is the business activity okay in Philadelphia, their region? The Conference Board, August leading, coincident, and lagging indicators will come out at 9. And if you're a trader in natural gas, they're looking for another build of 76 billion cubic feet. They normally get about 74 at this time of the year, so pretty much online. So what do you do with this all? Well, you scratch your head and you go, what do I have? Remember the yin-yang impact. I just did a show in Australia. I just finished. It's from America 14 hours ahead. So they're at now, we're at 7, so they're at 9 o'clock, maybe 10 o'clock. They might be 13 hours ahead where I was doing it. They're just waking up. They're seeing all this. They're reacting. In Europe, if it's 7 here, it's easily 1, 2 in the morning in many there. They're sleeping, they'll wake up, they'll react. And by the time you and I get up, I'll be up a lot earlier than you. I'm typically 4 in the morning. We'll wonder to ourselves, what do the markets now look like? What's moving? I wasn't surprised to see profit taking hitting the metal markets, but it just might be time to say in silver, hey, maybe it's time to walk away a little bit and let the market reestablish itself might be the right word. I believe in momentum trading, and the momentum is leaving that market, so I'd be very, very cautious there. Grains aren't really impacted by it, or are they? Well, if the dollar falls, as I think it will over time, they'll get a positive bend from it. Bonds and notes. You saw the 10-year note go for a second. I'm exaggerating, maybe a minute. I'm not exaggerating. 3.99 and a fraction. It finished 4.085. So the market reversed course there. And energies are just sort of neutral right now. As you look at the S&P, you wouldn't know that anything's going on. You're at an all-time high if the week were to close right here. That's important. When you go to the bar chart, you can see that now you're back from Monday. Monday, that's where you were. Tuesday. Actually, I got this wrong. This was let's see. If today's Thursday, Wednesday, Tuesday, we made the high of the week. Now you're backing off. There's nothing wrong with that chart. You still have a pattern of higher highs and higher lows at this point. Support, if it slips, as I see it, it's around 65.28.5. The market should have some trouble at the upper Bollinger Band. That's typical. It's been running it, and it has the bullish embedded reading. So put a gun here, I'm still bullish. No change. Get the red line to close under 79, then I went out of the market. In the NASDAQ, same thing. Bullish. Why not still higher? Higher lows, higher highs. The Dow, not in the same party. Not embedded, just drifting, overbought against the Bollinger Band, not the place to be on my type of work. And in the Russell, you have to be in my work. Now you have to walk back from it just a little bit, but I think it will ultimately be a heck of a buy. And the reason is these are the companies that wait for interest rates to drop and people go scooping them up. Problem is it's run into a new high, made the highest high it made, and the profit taking hit it. Okay. When can you re-embed if you lose a reading like you did today? Only the next day. So Thursday, you need a big up in the markets that lost their embedded reading today to want to come back to them. The DAX got hit as the market's pulling back, but it's just what I teach you. I go, when you're under the 18-day average and you get the market trying to turn up, it's called a bear market rally, and it has to decide what to do at the 18-day average. In the case of this market, it's also been fighting at the 100, and it's done that now back here, here, and here. It might go to the Bollinger Band. We'll see. What's the trend? Down. What's the bias? Down. The market has to clear 44.50 in order to negate the downtrend. 10-year notes. You're adding yield back, not taking it, and you lost the embedded reading. When did that happen? So you and I come right here. You were still embedded, and this was on the close of business Tuesday. Today you lose the reading. So the odds favor that price in the 18-day average, which they're doing, will make a run at each other, and that's all that it's owed. Now it can decide, does it want to hang in there, and what's the next move for it? You've already been with the lost reading. Momentum, as I'm teaching you, often leads price. Is it every time? It's the vast majority of them. Just go back and look at your own chart work and do that. But as it turned down, I was looking for the 18-day average, and I got it. And no, you didn't go up and make new highs. In the dollar, you're oversold. I can make an argument for a bounce here, but I can make an argument for a failure as it gets up towards the 18-day average of closes. And you got too high in the euro. You made the highest high of the whole move going into this in an overbought market. Why not see some profit taking? Makes total sense to me. The British pound, is it going to embed or not? I don't know. It needs to get through tomorrow for us to have that question better answered. Bitcoin has been coming up, but it's overbought. I really think it's going to have a lot of resistance in this $118,000 area, and I see support back at 113,310. When we come to the energies, I can still make an argument of higher lows and a higher high off this high. That arrow shouldn't be there. I think that should be pointing up here. Here you've got the arrows pointing up. Uptrend still at work there. Heating oil, void of a trend. Lower low, higher high, and in the natural gas, a lower low, higher high. I'm just not seeing a lot there, but I don't think there's a lot of upside in the nat gas either. So you put it all together, and tomorrow's going to be what I call the fun day. So if you want to take advantage of that, well, join me in the morning in my morning subscriber videos. I record the futures at 6 a.m. It's ready about 6:30, 6:45, and it's got specific buy here, sell there, do this. I also put out twice daily written updates. To find out more about my research, click up here, go to the word research, and it'll all be waiting for you. I'm Ira. Look at the other videos. I'll catch you in the morning as well in the morning subscriber video. Have a great evening.